Welcome to today's session. Data from RBI shows that the deposits with the small finance banks have grown by 31.6% in the third quarter, that is the quarter that ended in December, when compared to the second quarter. And the phenomenal growth of small finance banks has come on a very small base. And because of this, the bigger banks and NBFCs are not seeing it as a competition, are not considering small finance banks as their competition, right? So in this regard, let's look at small finance banks in today's video. Let's get started. So let's start by understanding what these small finance banks are. So these banks will primarily undertake basic banking activities. What are basic banking activities? Acceptance of deposits and lending activities. They will lend to unserved and underserved sectors like the small business units, small and marginal farmers, micro and small industries, and the unorganized sector. In case of small finance banks, a number of restrictions are imposed on the banks in terms of what they can do and what they can't. So now let's look at what they can do. They can take small deposits and disburse loans. See, small is the catchword here. They can take small deposits and disburse small loans. They can distribute mutual funds, insurance products and other simple third-party financial products. Okay, they have to deal in smaller and simpler financial products. They can't get into the more complex and the costlier products of the financial markets. They can lend 75% of their total ANBC, that is adjusted net bank credit, to priority sector. See, this in case of a scheduled commercial bank is 40%. So a scheduled commercial bank has to undertake a priority sector lending of 40% of its ANBC. But in case of a small finance bank, it has to lend at least 75% of its ANBC. The maximum loan size would be 10% of the capital for a single borrower and 15% for a group. Minimum 50% of loans should be up to 25 lakhs. Now let's look at what these small finance banks cannot do. They cannot lend to big corporates and groups. They cannot open branches during the first 5 years of their opening at least without the prior RBI approval. The other financial activities of the promoter of the small finance bank, must not mingle with the bank, with the financial activities of the small finance bank. It cannot set up subsidiaries to undertake non-banking financial services activities. Alright, and it cannot be a business correspondent of any bank. These small finance banks are under the strict regulation of the RBI. Now let's look at some of the guidelines for small finance banks. Promoter must contribute minimum 40% equity capital and should be brought down to 30% in 10 years. That means the promoter's initial equity capital would be 40% and it should be brought down to 30% in the first 10 years, and minimum paid up capital should be at least rupees 100 crores. And this is the next one is very important. CAR, or the capital adequacy ratio, should be 15% of the risk weighted assets, and the tier 1 capital should be 7.5%. See, the tier 1 capital is basically the core measure of a bank's financial strength from a regulator's point of view. It is basically composed of the core capital. It can consist of the common stock and the disclosed reserves. So all this makes up the tier 1 capital, and the tier 1 capital should be 7.5% in this case. There is a cap on foreign shareholding at 74% of the paid capital, and FPI cannot hold more than 24%. Priority sector lending, like I already mentioned in the previous slide, is 75% of ANBC, and 50% of loans must be up to 25 lakh rupees. The CAR, capital adequacy ratio, and the tier 1 capital requirements are based on the Basel norms. This image summarizes today's video. This is the timeline of all the events that happen, and here we have mentioned what they can do, what they cannot do, what the small finance banks can do and cannot do, and these are the guidelines. Please go through this image. So with this, we have come to the end of today's session. Here we have mentioned a few model questions. Please answer them. Hope you like this video. See you in the next video. Thank you.